you want to sell the bad and keep the good. But oftentimes, you find people selling the good and unable to sell the bad. So in a weird way, they sell the good, or they sell the good and keep the bad. And so for us, we want to buy quality, manage it well, hold long term.
Try not to ever sell, right? And just only ever own, take on good debt when it makes sense. Don't over leverage the portfolio, and just buy more and more and more and continue to get more and more cost seg. Can you talk about that strategy and how that's worked out?
Yeah, it's worked out great. I mean, we think at the end of the day, you want to own quality assets, and you want to own them for the long term, and as a general, it sounds overly simplistic, but it's probably not too far off. You want to sell the bad and keep the good. But oftentimes, you find people selling the good and unable to sell the bad. So in a weird way, they sell the good, or they sell the good and keep the bad. And so for us, we want to buy quality, manage it well, hold long term. And the goal is to return capital to members as quickly as you can in any given investment vehicle. The goal is to return capital, when you can. And, once that's achieved, ideally you have assets left over and members have their capital back. And so now that they have their capital back, they then could potentially have lingering economic interest in the property. So they have their capital back. They now own a portion of the portfolio. So they have assets left over. They have their capital back, and they continue to benefit from distributions into the future with a zero investment basis. So in that point in time, if you have an investment where you have no capital left invested in the deal, and you're getting distributions from that investment in the future, it's an infinite return on present capital, which is zero. So any distribution is infinite. To your point, if you use cost segregation or any kind of accelerated depreciation, you've taken a lot of depreciable losses early in the investment cycle. Your capital account balance, your tax basis is probably low to zero. And so conceptually down the way, if you sell the assets, you sell the properties, you could conceivably pay a lot of tax in the form of recapture. So you pay a lot of tax to get your money out of an investment vehicle yielding infinite return on present capital. So it doesn't make sense to pay tax, to get rid of an infinite vehicle so that you can then go redeploy your capital after tax, take new risk on a new investment, new assets, and make a lower return and pay tax to do it.